Steve, let's turn then to the US, one of the largest travel markets and very important to many of these travel companies, the booking agencies, and indeed the travel tech players as well. So I think as with many of the other countries we've discussed here, we saw this precipitous decline early in the year. In really March to April time was the significant shift for the US. And you'll see from the chart here, the substantial decline was really across the B2C travel modes, whereas the dip in air cargo, shipping, road freight was much more modest. And what's interesting in the US evolution is that really tale of two subsectors has continued through the pandemic, and we see that continuing now through to the last quarter of the year as well, perhaps with the exception of hotels, which are straddling a little bit in the middle here. And I think this stable uncertainty that Stuart was referring to for the UK is very apparent in the US as well, particularly in the B2C modes. So perhaps let's start with the freight and cargo segments. And you'll see from the chart here, they had what we would describe as a more modest impact. I think in normal times we'd have said 10, 15, 20% hit to the sectors was very, very substantial, but obviously relative to what we're seeing elsewhere, we see that now as more modest. And you'll see from the chart that the freight-related segments are mostly back towards pre-COVID levels, a little bit of variation here, but you'll see that we're mostly up towards the 2019 levels. For shipping, we see exports that have weakened a bit, but as Steve was referring to, imports to the US last month were record-setting, and we've seen this consumption shift to physical products and significant importing as a result. And we think that momentum is continuing to drive some capacity constraints and rate as well. Similar picture in road freight. The tonnage is down overall, with certain sectors like retail performing very well. But similarly in rate, we see pretty tight capacity in road freight, and there are significant driver shortages just in the way the job and labor market has shifted, which continue to drive up spot loads quite significantly actually right now. So across these freight modes, at least in the US, we see a combination of pretty strong sector performance and some levels of tightness that are driving rate. And so that's given very strong third quarter performance for many of the freight carriers and a lot of momentum going into the remainder of the year. And then as we look ahead, there's Black Friday, a very busy shopping season around Thanksgiving in the US towards the end of November, and then the holiday shopping season as well. And we're seeing very substantial e-commerce logistics shifts. So all of the players involved in e-commerce parcel logistics are right now in sort of frenzied planning for record volume and capacity needs through the season. And we're seeing seasonal surcharging and other elements like that to try and manage these capacity limitations, as well as anything they can do to provide additional capacity, just given the significant e-commerce shift we're seeing. And then the other trend that I think is starting to come online and will be more important in this space over the coming months is an intense focus now on preparation for vaccine transport. So we think that'll have some real implications in air cargo capacity and other elements of the freight space as well. So in many ways, that's a more robust story across essentially the top part of the page here, the freight-related lines. In contrast, the B2C travel story in the US is significantly weaker than many of the other countries that we've been talking about this morning. And you'll see most of the lines, with the exception of hotel, most of the lines clustered towards the bottom of the page, and in fact, trending flatter over the past couple of months. And so if we look at what's happening there, perhaps with hotel occupancy to start, which is a bit more robust, we're now seeing occupancy up to about 50% levels again in many places. So while it's significantly down year on year, it's certainly shifted from where we were in the April-May timescale. And this is really being driven by large opportunities for drive-to destinations, which the US has plenty of. And so particularly in parts of the south of the US where there's drive-to destinations, where the benefits as well, we have seen some level of demand come back from people taking advantage of being able to drive and use properties in those regions. But despite that gradual recovery, I would say that hotels are remaining cautious about where we're going through the remainder of the year. And in general, staffing levels are being held down at lower levels until there's a bit more clarity about what the next few months have in store. And the hotel curve certainly hasn't had a significant sharpening of uptick. It's, if anything, continuing at this very stable, modest growth rate. Rental accommodation has been an interesting upside. We've seen a lot of the vacation rental had a pretty strong summertime, again, drive to often home whole rental for COVID reasons. And so the sort of Airbnb effect, and I just saw a question coming in on that, Richard. So the hotel numbers, room nights here we're looking at is traditional hotel. For the Airbnb and other rental accommodation, we saw a particularly busy summer and significant boom there, and back to prior levels, and in some segments well above even. But that's actually dropped back post the summer holiday season, and as we get into September, October time, and people are less looking for family holiday places, we've seen that ease off significantly again. And then if we look at urban transit and passenger rail, the commuter side, I think that's quite similar to Stuart's comments on the UK. The major systems are under intense financial pressure due to limited ridership. And we have this interesting sort of middle ground where, cities are open, many offices are technically open, but in practice, the vast majority of office workers are continuing to work remotely, and that's compounded by school systems in the US that are remote or in hybrid models. So we have not seen a significant uptick in urban commuters, and there'd been a hope post-summer that September, October would see this shift back to the office and in-person working, and that's really not happened. And if anything, you can see from the curves, there's an element of flattening in the curves right now, and there's concern that as a second wave potentially comes on and COVID rates go up, we might see a significant drop-off again as we head towards the winter. It's also worth noting many large corporates in the US have indicated that staff won't be back in their offices until at least the new year, springtime. And in fact, a number of the leading tech companies have now announced to their staff that they're not going to have anybody back in their offices until next June or July or August. So that puts a very significant timescale on the likely commuter ramp up for at least some organizations. Then if we look down the bottom of the chart, international air travel and cruise, like I think almost all my colleagues this morning's comments, remain the hardest hit, both given consumer willingness to travel, but also practical constraints around travel restrictions, quarantines, and so those are down the bottom end, and we don't see any rapid shift in that. The domestic air travel has had a bit more growth. You'll see there the more modest growth up over the past few months. And TSA, the Transport Security Administration, had a day last week with 1 million passengers for the first time, 1 million daily passengers for the first time since the beginning of the pandemic. So we see a bit of an uplift there. And there's expectation that around the US Thanksgiving holiday time in late November and around the holiday season in December, we'll see some demand uplift. But aside from that, there's not a lot of expectation of significant shift in domestic air over the coming months. There are some targeted examples that I think are interesting. Hawaii last week opened up to visitors from the US mainland and required a pre-flight COVID test. And then I think the Big Island also requires a post-flight test as well. And assuming you test negative, you avoid the 14-day quarantine. And so we saw, 8,000 visitors flew in on the first day. And so that's nothing like the pre-crisis levels, but shows some pockets of pickup and experimentation to say, how do we create the conditions to be able to travel more safely. But nationwide, the airline capacity for October is down 45–50%. New York City, San Francisco, places like that very significantly hit. And as you see from the chart, it's a pretty slow growth of recovery. And so, of course, the big question is what comes next. And we are seeing curves flatten on a number of these, as you'll see there. And depending on the uptick in COVID cases as we head into the winter season, that's likely to determine what the next quarter or so looks like. But I think, as Stuart says, this sort of concept of hesitancy and concern about the forward curves means, at least in the B2C side, we're unlikely to see a significant shift in the coming months.